Are you thinking about investing in cryptocurrency instead of buying a rental investment property? Well, don't. And let me tell you why. I'm Jim Chu with Royal LePage, and I'm here to help you to buy real estate smarter. Now, don't get me wrong, buying stocks or bonds to contribute to your RRSPs or your TFSAs is a good thing. Doing this will help you to save money for your down payment for your first home. What I'm talking about is when you have $100,000 to $200,000 to invest. When buying stocks, bonds, or cryptocurrency for an investment, you need 100% of your own money. While if you buy a rental investment property, you only need 20% of your own money, while the balance, or 80%, would be financed by the bank. Therefore, you would be using mostly somebody else's money to help grow your investment, as opposed to 100% of your own money. Now, it's true that there's something called a margin account that you could get, which allows you to use the bank's money to invest. But a margin account is not something that you or I would have easy access to. At current market prices, Bitcoin is trading at approximately $53,000 Canadian. Therefore, you wouldn't be able to buy a lot of Bitcoin. And the thing about cryptocurrency, it's very volatile. One day you could be a millionaire, and the next day you could be broke. Not to mention, there's always that risk you can lose your money to a scam artist. Keep in mind that when you sell stocks, bonds, or cryptocurrency, it's considered income, and 100% of the profit is taxable. Therefore, if you make $100,000 in profit, and your tax rate is 40 or 50%, that means after taxes, you will have only earned about $50,000 or $60,000. On the other hand, if you had a rental investment property that you sold and also made $100,000 profit on it, then only 50% of it is taxable. Therefore, at a 30% tax bracket, you will only pay about $15,000 on that $50,000 taxable income. This means that you would have made $85,000 on that $100,000 profit. This does not take into account the tenant who has been paying down your mortgage for the last year or two, and thereby increasing your equity by $15,000 or $30,000. Now, you might be saying to yourself, I can't afford any investment properties here in the GTA. And this very well might be true, but my argument would be, look outside the GTA. Look at other cities in different parts of Canada. There are many homes in smaller communities, smaller cities throughout Canada that for $100,000 to $200,000 you can easily buy an investment property. In fact, in some of these towns, you can even buy an investment property for as little as $50,000 down. Now granted, when you do buy an investment property in a different city, more than likely you will need a property manager. But that's okay, because the property management fee is tax deductible. So to recap, when you buy investment stocks, bonds, or crypto, you will need 100% of your own money. And when buying a rental investment real estate property, you can do so with as little as 20% of your own money. Next, when you sell your investment stocks, 100% of the profit is taxable. On the other hand, when you sell your rental real estate investment property, only 50% of the profit is taxable. And also, don't forget about the bonus of buying a rental investment property. You have a tenant that is paying down your mortgage, helping you to build more equity. I hope you have a better understanding as to why I think investing in stocks, bonds, or crypto is not a good idea, and it's better to put your money into buying a rental investment property. I'm Jim Chu with Royal LePage, and like I always say, if you're thinking about buying or selling real estate, just hop on the choo-choo train. Take care. Bye for now.